Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, October 31st, 2023. Happy Halloween to everybody, and let's get started. So, anybody who really has been going against the predictive analytics model, they have not been doing well. This is where we had the 1% bullish. We weren't shorting here because the time period removed from the bearish time, but we weren't really getting any extreme bearish sentiments until we came all the way down here. And when we got the bounce and we took it out, like, this is what we've been waiting for. So when you have everything lined up where we have bullish divergences, you have a time period that's not bearish, it's not really that bullish, and then you have sentiment that comes in. This is just what happens. You get moves that go up 98 points in a matter of a couple days. Everybody who can't believe that the market's going up is shorting it the whole time. And then now we have tomorrow, what I said was, the bulls have a roadmap to cause a squeeze, and that roadmap is going to be the Fed meeting tomorrow. It's pretty known that they're not going to be raising rates. At least that's the expectations on the street. And I don't think they're going to. I think the interest rates the bond market has already fixed that for them. But the thing is that, if they don't raise rates and give a little bit more of a dovish outlook, you can see the algos trigger, a huge buy signal. And before we know it, we're going to be up at the 42.22 and probably closing this gap up to 42.48. So there's, it's just one of the things that you have to be looking ahead. And right now, everybody's, calling this just a dead cat bounce. And I do believe it is as well. But I've seen dead cat bounces go a lot higher than a lot of people have anticipated, including myself. But here you can see the 15-minute chart. We have the bearish divergences. We're right at the resistance where I said if we can get above the 41.76 level, then we should have a move up to the 41. I think my resistance I had was 80 up to the 41.94, 4200. And that's pretty much where we are. So seeing some backing and filling would make the most sense just because of the way that the 15-minute chart is set up with the bearish divergences in place, resistance right here. So a pullback down to the 41.70, maybe even down to the 41.64 would make sense. If they decide to come up, guess what? I'm just going to manage my third of a position on the long side, wait for the 100 points, and then step out and just wait for a pullback. So that's really my game plan. Now, if they pull back, this is where you start looking. Remember, they broke out of this inverted head and shoulders pattern, and the upside target's 42.23. So if we get the pullback and say they come back and back test the 41.50 and then head up, I'd be interested in looking long. The only thing that would hold me back is kind of I don't really like to make any kind of trades or new entries on Fed Day because there's such erratic moves in both directions, and I just don't really like staring at my computer every second of the day and seeing what's going on. So I'll wait and see on it. Again, if we get a big move to the downside, I'm just going to be looking to add. If we move up, then I'll manage that third of a position, take it off, and then just look to build it at higher levels. So here we go, the 60-minute chart here. So again, what we're looking at, we're right at the resistance. If the bulls can get through it, obviously this is some resistance right at the 42.23, but the odds of us coming up to this 42.80, 42.60 are really good if we can get, if we get above these levels. So we have the open gap that's at the 42.50. We have an open gap that's down at the 41.17. So this really could be our little zone right here, these two gaps. And if the bulls can break above it, then again, we're coming up to the 42.80 and probably more likely up to the 43.13. If the bears can push through this 41.30, then we're going to come down and close this gap here. But I guess, I'm leaning on the bullish side of things just because I just think way too many people were bearish on this market. And I know the geopolitical uncertainty that's going around gives everybody everybody every right to feel a little shaky about this market. But as I said, when everybody leans one direction, and that would be the 3% bullish sentiment reading and the 1% right here, it doesn't take a lot to spark these rallies that go a lot higher than people anticipate. So I wouldn't be surprised to see us still head up, but I'm leaving the door open just because of the Fed meeting tomorrow. That, maybe just take some off and lock in some gains and move to cash. But I'll play it by ear tomorrow and see how we open. So again, support levels, fairly simple here. The Bears got the Bulls have to defend the 41.70. If they get below that, then we're looking at a move coming down to the 41.50, and below that, then we're coming 41.34. Above the 41.94, we should have it's resistance. We have resistance at 4200, but my guess is we're coming up to the 42.24, and with a good chance of closing this gap at the 42.47. So I was checking out GLD today. That took it on the chin a little bit. Anybody that got the gold report knows I was anticipating a little bit higher, but I was looking lower and not to be buying. So I'm still very, very bullish on gold over the next few years. But right now is not the time to buy because too many people got too bullish on gold. And with that, have a great night, and I'll talk to you guys in the morning.